Hello people. Welcome to Investo Brain. In today's video, we are going to do a detailed analysis on upcoming Zomato IPO. But before starting with the video, I want to request you guys that please ignore the background noise. I'll improve the quality of the mic soon, but for now, please ignore the background noise. So I'll not waste your time. So let's get started with the video. So yesterday, one news came in that Zomato is planning to launch an IPO in July. If you're planning to invest in Zomato, you should definitely see this video. To know about the company, investing without knowing about the company is the foolish thing to do. So this video is definitely important for you if you are going to invest in this company. So let's start with the detailed analysis. If you are going to invest in Zomato IPO, you should know about the company, how the company was built, what was the story behind the company. So let's see story of Zomato. Story of Zomato. The seed of Zomato was sown approximately 12 years ago. Back in 2008, the thought was conceived in the minds of three passionate foodies who despised waiting for so long in queues. It was the need to have access to all the restaurant's menus digitally at one place, and the passion to make it available for all that gave birth to Zomato. That idea was their baby, and now that baby has grown into a vision that drives a team of 5,000 plus people every day. That's amazing. Let's see. Zomato wasn't Zomato from the beginning. It started as a foodie bay, which was an online restaurant directory. CEO Dipender Goyal felt the need to change the name as it resembled eBay. It sounds same, right? So they changed the name to Zomato, and he visioned to create a unique identity of own. Hence the christening ceremonies happened, and since then it's known as Zomato. From a home project, it has lengthened into a large food aggregator that operates globally. With its footprints in almost 24 countries and over 10,000 plus cities, it is consistently walking towards its vision of better food for more people. In addition to discovery and delivery, Zomato has also entered various segments like restaurants, reservations, loyalty programs, and live events. Zomato not only functions as the connecting link between food and people in every context. Instead, it sets an example by cooperating and working with restaurants closely to enable a sustainable ecosystem. Okay, let's see company's source of income. The company's biggest source of income is from commissions, both from listing restaurants on its feed plus for food delivery services. So the company earns from listing restaurants on its websites and app and from delivery services. Other sources of income include subscription services, Zomato Gold. If you are using Zomato, you'll know this about Zomato Gold, live events, and consultancy services for restaurants. On the expense side, the company's biggest cost factors are outsourced support costs, which include availability fees paid to delivery partners, as well as support expenses such as costs related to call centers, advertisements and business promotion, and employee benefits expenditure. Okay people, tell me, who is the biggest competitor of Zomato? Most of y'all will know this answer. The only competitor and the biggest competitor of Zomato is Swiggy. These two companies enjoy the duopoly market in India. Okay, let's see people over here. While competition is not something Zomato may be concerned about right now, Swiggy is the only other major player. That may change as Amazon is eager to have skin in the game. So people, Amazon is planning to enter in this food delivery game, food delivery service thing. So if Amazon comes in this market, then it is very difficult for Zomato and Swiggy to like survive. I feel like if Amazon comes in, then one company will vanish. Like it may be Swiggy or Zomato. Amazon is such a big giant. For example, you can take Jio example. Before Jio, there were many telecom companies in India, but after Jio came, slowly a lot of telecom companies disappeared. Like you can take Tata, Docomo, Uninor, Aircel, like this. So if Amazon comes in, it is very dangerous for these two companies. The e-commerce giant has expanded its food delivery services in Bangalore, which began in May 2020. The last time an American company tried to make it big in Indian food delivery, Uber struggled to succeed, and it sold its business to succeed. As you guys know, in starting, when these companies all started, there was Food Panda, Uber and all, but these companies didn't survive in India and they vanished. But with its low commission, deep discounting and prime offers, Amazon may give the Zomato Swiggy duopoly a run for its money in the long run. So if Amazon comes in, then this duopoly market will end. From a sector specific point of view, Zomato enjoys a place atop India's online food delivery hierarchy. Particularly since its acquisition of Uber Eats in January 2020, the food service sector itself is a promising one. Currently worth $80 billion, and online food delivery is expected to reach $22 billion by 2025 at a 40% compounded annual growth rate. Market penetration is only 7% as of today, limited chiefly to big cities, but it is expected to grow to 20% in the next 4 years. So that's amazing. So this food delivery companies have huge growth opportunity in future. And our India's population is also so huge. So in India, there is a huge growth opportunity for these two companies. And if Amazon enters in this market, then that is a threat to these companies. So in future, what will happen? Nobody can tell, man. Okay, is this company profitable? As of now, Zomato is a loss-making company. It clocked 1,367 crores revenue in the first 3 quarters of FY21. However, the expenses were about 1,724 crores, which led to a loss of 684 crores. So as you can see, the expenses are higher than the profit. So the company is still burning cash in order to attract customers. The loss of the company is 684. So the loss is higher than the profit. In future, this company may earn profit, but as of now, these companies are loss-making. Revenues increased by 96% to 2,743 crores in the year ended March 2020 from 1,398 crores in the previous year. So the revenues of the companies are increasing, but the expenses are also increasing. Here is all you need to know about Zomato IPO. Zomato is seeking an IPO valuation of $10 billion. An Economic Times report has said that the Zomato is likely to hit markets on July 19. So this stock will list on stock exchanges likely in mid-July. It added that the price band is likely to be in between 70 to 72 per share. So people here, the price is 70 to 72. By seeing this price, many people will blindly invest in the stock. But you should not do this, people. This is very wrong. You should see the fundamentals of the stock, how the company will perform, what you feel about the company, what's the future, what is the future, what is the possibility of the future growth of the company. So you should see all these factors and then you should invest. 70 or 72 is not low. The price, you will feel this price is low, but it's actually not. You should see the price is justifiable with the fundamentals or not. Please directly don't invest. First research, then invest. The Zomato IPO will see a dilution of 10 to 15%, largely through a fresh issue of shares and an offer for sale OFS by its early investors InfoEdge India. InfoEdge, many people will know InfoEdge, Naukri.com. As I was talking about InfoEdge is reduced its OFS size in Zomato's IPO by half to 375 crores from 750 crores as planned earlier. So InfoEdge has 18.52. Here you can see InfoEdge has 18.52, 55% of stake in this company. So they were planning to sell 750 crores worth of stake in this company, but they have changed their mind and they are now selling 375 crores worth of stake. Zomato wants to use the IPO proceeds towards acquisitions and organic growth plans. So the Zomato is launching an IPO for the capital, and they want to use that capital for acquisition and organic growth plans. Several large asset management firms and some existing investors such as Temasek could be coming as an anchor investor in Zomato's IPO. Its existing investors include InfoEdge with 18.52 55%, Uber BV 9.13, Alipay Singapore 8.33, and as you can see, Tiger Global 6%, and many more. You can pause and see the investors. Okay, my final verdict on this upcoming Zomato IPO is that company is now loss-making. It doesn't mean that company is bad. The company is burning cash in order to attract customers. For example, Flipkart. Flipkart is India's biggest e-commerce site, but Flipkart is also a loss-making company. For example, Amazon is world's biggest e-commerce site, and Amazon also was a loss-making company for many years. Many big Indian startups are loss-making companies. These companies are future-looking companies. They are burning cash to attract customers and to put us in habit to order online. So the Zomato and Swiggy are burning cash in order to put us in a habit to order online. This is new for us. So they are giving offers and all to put us in a habit. For example, you can take Cred also. Cred is also burning a lot of cash to attract new customers. But when Zomato stops giving discount and it starts charging you higher for delivering food, will it sustain in India? That question you have to ask to yourself. Will it sustain in India if it stops giving all the discounts, free delivery and all? When it stops giving, will it sustain in India? Will it work in India? That question you have to ask. Nobody can tell it will sustain or not in future. But by taking some facts into consideration, you can see this is sustainable or not. Don't be in a hurry to invest if you are not sure about the company. Wait for some time, see how company is performing and then decide. You should not be in a hurry to invest, people. So with this note, I end my video and thank you for watching. I'll improve. Sorry for the background noise. I'll improve it. And thank you for watching. I'll meet you in the next video, guys. Bye bye.